Hello traders, the title of the video is how to use the Elliott wave triangle ABCDE to forecast the fifth Elliott wave extension like a pro. Alright, so we are looking at the McDonald's stock on the quarterly charts. My apology to traders because I would like to use the quarterly chart this time instead of the monthly chart. And we want to talk about how to use the Elliott wave triangle, the ABCDE chart pattern to forecast the fifth Elliott wave. All right. Because a trader has asked me, to record more videos about the Elliott wave triangle, and that's why I'm recording this video today. And looking at the McDonald's stock on the monthly chart, on the quarterly chart, apologies to trader, on the quarterly chart, this is the first Elliott wave that has started in 2003. We know that in 2003 we have the commodity bubbles, the commodity trend, all right, the commodity boom, all right, followed by the correction, which is the second Elliott wave. All right, so this is the first Elliott wave from here. Hold on, please. From here to here for McDonald's stock, that's the first Elliott wave, followed by the second Elliott wave right here. Okay, that's the red line here, and then we have the third Elliott wave. I'm going to color it in orange. That's the third Elliott wave right here, and now the fourth Elliott wave is a triangle. A, B, C, D, E triangle, and we are now expecting the extension of the fifth Elliott wave. All right. So that was a very excellent question asked by an Elliott wave trader that want me to record more video about the Elliott wave triangle. All right. So if the fourth Elliott wave, all right, is an Elliott wave triangle, if the fourth Elliott wave is an ABCDE triangle, very often the fifth Elliott wave will be extended. All right, so this is not an exact science, all right, but very often talking about high probability, that the fifth Elliott wave will be extended. If we see a triangle, the ABCDE triangle, all right, in the fourth Elliott wave, we will expect that the fifth Elliott wave will be extended. All right? It's not guaranteed. It's not always the case. But the first thing that will come into our mind as an Elliott wave trader is that if the fourth Elliott wave is an ABCDE Elliott wave triangle, there is a high probability that the fifth Elliott wave will be extended. All right. So this is what we see here. So we see the first wave, second wave, third Elliott wave. Now we see A, B, C, D, E, a triangle. We will expect for McDonald's that the fifth Elliott wave will be extended, which means the fifth Elliott wave will be formed of 5 Emmanuel wave. Okay, all right, will be extended. All right, but you have to understand that there is an article. Okay, I want to tell you more about that article. That article is posted at www.fool.com. Motley Fool, you know Motley Fool, so it's www.fool.com. So www.fool.com. The title of that article is that should investors be worried that McDonald's just ousted 3 top executives? So you go to www.fool.com, you look for the article that is titled, should investors be worried that McDonald's just ousted 3 top executives? So what is happening with McDonald's stock, I will tell you very fast in that article, is that McDonald's is trying to transform the way they do their business, and there were some chief executive involved. One of the strategies that they have adopted is to have 24 hours breakfast time. You know, when you go to McDonald's, normally it's in the morning that they have the breakfast. So they came up with this idea to have breakfast any time of the day, and it was working nicely. All right. So one of the competitors of McDonald's is Burger King, and Burger King has been posting consistent above market expectation earnings. So Burger King was making more money than McDonald's. So for those reasons, McDonald's came up with some strategies, to improve their earnings. So one of the strategies is to have 24 hours, breakfast instead of having breakfast in the morning. And it was working very well. But recently, that strategy has failed. For that reason, they have sacked or they have removed 3 top executives. So if you go to www.full.com, you read that article about should investors be worried that McDonald's just ousted 3 top executives. I'll try to remember to put the link in the description section. If I forget, try to remind me and I will put it there for you, okay? Very excellent article at www.full.com, all right? So, looking at the chart, because they have removed 3 top executives, because they want to catch up with Burger King, which is one of their competitors. But looking at the chart itself, it's very interesting. They are making a bit of change to their strategy, a strategy that can propel the stock to the higher prices. But as we are using the Elliott wave analysis, we have noticed that in a 4th Elliott wave on a quarterly chart, we have an ABCDE, a triangle. With that, the first thing that is coming to our mind is that the 5th wave will be extended. So I have recorded a video earlier on that I posted at 2digit4 stocktrader.com, and the title of that video, what is the title of that video? Let me look on my is that the title of the video is Stock Trader Analyze a Stock. Should investor be worried that McDonald's just ousted 3 top executives? That's the title of that video. Stock Trader Analyzes a Stock. All right. Should investor be worried that McDonald's just ousted 3 top executives? Now that video I have not yet posted at 24 Stock Trader YouTube channel. I will be posting it late tomorrow. So tomorrow will be the 14th of all right. So it's already 14th of April, because we are past midnight, because 35 minutes past midnight in London. I'm recording the video now. So late in the night, around 2 a.m. London time, that's 9 p.m. Eastern time, I will be posting that video at 24 Stock Trader YouTube channel. All right. So talking about Elliott wave analysis, how to use the Elliott wave, a triangle ABCDE, to forecast the 5th Elliott wave, is that very often one of the rules that we use is that if the 4th Elliott wave is an ABCDE triangle, there is a high probability that the 5th Elliott wave will be extended. It's not guaranteed. This is not an exact science, but this is an expectation. So if you notice that the 4th Elliott wave is an ABCDE Elliott wave triangle, the first thing that should come into your mind is that there is a high probability that the 5th Elliott wave will be extended. Looking at McDonald's stock on the quarterly chart, we see the 1st wave, 2nd wave, and the 4th wave. Now we have, during the 4th Elliott wave, A, B, C, D, E. Now we can see that, the price went up, 1st move, 2nd move. Now we will expect it to extend it to go up more, forming 1, 2, 3, 4, 5 wave that will form the extension of the 5th Elliott wave. Now, I said that we will expect, which means it's not guaranteed. Looking at, so what we are doing now, okay, remember what I say all the time, that we are looking at the McDonald's stock. But if we just analyze or apply the Elliott wave principle to the McDonald's stock alone, that will be a mistake. Because the best approach is to apply what we call the trending triangle. The S&P 500 is confined in a triangle. Anything is possible with the market. So if the S&P is becoming more bearish, that will have a negative effect on the McDonald's stock. Though we are expecting, okay, the fifth area will be to be extended. If it happens to be that the market, which is the S&P 500, becomes bearish, which means the price drop below that triangle for the S&P 500, talking about the trending triangle, all right, that will have a negative effect on the McDonald's, all right. So we need to be careful. Talking about high probability that the fifth area will be extended is not guaranteed, but if the market breaks above, all right, if for instance the S&P 500 goes above that triangle that I talked about before, all right, and find a support and start going up, most of the financial instrument will start becoming very, very bullish. Therefore, in that case, we will see a lot of fifth Elliott wave extension. So I'm telling you now, as an Elliott wave trader, that if the S&P 500 breaks above that triangle that I talked about before, okay, I will refer you to that video that I posted at 24digit4 stock trader YouTube channel. S&P 500, the title of that video is S&P 500 trading conflicted stock market faces moment of truth. So repeat again, the title of that video for the S&P 500 is S&P 500 trading, all right, conflicted stock market faces moment of truth. Posted at digit 2, digit 4, okay, stock trader YouTube channel. Check it out, okay? Very, very important. So we are now expecting the McDonald's stock to form to have a fifth Elliott wave extension, but that will only take place if the market breaks above that triangle. We are trading first the market before the McDonald's stock. But as an Elliott wave trader, all right, in theory, we have the first Elliott wave, second Elliott wave, and the third Elliott wave, all right. Now we have ABCDE, all right. We are expecting the fifth Elliott wave to be extended. This is about how to use the Elliott wave triangle, the ABCDE chart pattern, to focus, all right, the fifth Elliott wave. So that is one more thing that I want to share with you. We know that you see here, we have this is my third Elliott wave on a quarterly chart. We know that the third Elliott wave, all right, according to the Elliott wave rule, should not be the shortest wave. You know that, isn't it? You know it. So what we can do here, as we are expecting, the fifth Elliott wave to be extended, one of the tricks that we can do is to put the length or the magnitude of the third Elliott wave right here, all right, knowing that the third Elliott wave should not be the shortest wave. So by using the length of the third Elliott wave, we have a target at 142, all right, 70 for the fifth Elliott wave. But I doubt it. I doubt that you will stop here at 142. All right. The reason that I would prefer to use the magnitude, talking about from the low of the third Elliott wave to the high. All right. So this is about the magnitude of the third Elliott. This is from the low of the third Elliott wave to the high. What I've done now is about the length of the third Elliott wave. So with that, when I put, hold on, I moved the line. Oh, I didn't want to move that. Okay. All right. So when I use the length of the third Elliott wave, put it at the low of the fourth Elliott wave, we have a target at 142.70. I talk about this in a video, so I will tell you the title of that video. Okay. I have not yet posted that video at 24 Stock Trader YouTube channel. I recommend to all stock traders that are using the Elliott wave to subscribe to the 24 Stock Trader YouTube channel. So I will be posting that video, and the title of the video is a stock technical analysis. Oh, where are we? Hold on, please. It's late in London, so hold on, please. The title of the video is Stock Trader Analyzes a Stock. Should investor be worried that McDonald's just ousted three top executives? I mentioned that before. So tomorrow around 2 a.m. London time, that's 9 p.m. Eastern time, I will be posting that video. All right. So using the length of the third Elliott wave, this is the length of the third Elliott wave, I project it to the low. All right. I can expect the fifth Elliott wave to come to $142, $142.70. But as I mentioned to you, watch that video if I post it tomorrow, late tomorrow at 2 a.m. Eastern time on the 14th. So that will be on the 15th of April. That video will be posted on the 15th of April at 2 a.m. East London time. That's 9 p.m. Eastern time. All right. That video is about stock technique. Where are we? That video is about stock trader analyzes a stock. Should investor be worried that McDonald's just ousted three top executives? All right. But now let's use the magnitude of the third Elliott wave. So this is the magnitude of the third Elliott wave from the low to the high of the third Elliott wave. Now we put it at the low of the fifth wave. It's also below the 142.70. It make me a bit worried though. It make me a bit worried because when I apply the height of the third Elliott wave, I'm talking about the magnitude of the third Elliott wave from the low to the high, and also the length of the third Elliott wave. The target for the fifth Elliott wave is somewhere near $142.70. There is a problem, all right? There is a problem because you can see that if I call this the first Manon wave or of the fifth wave, and this one the second Manon wave or the fifth wave, where will be the third Manon wave or the fifth wave? Because normally the third Manon wave of the fifth wave should not be according to the Elliott wave rule, should not be the shortest wave in comparison to the first Manon wave and the fifth Manon wave of the fifth wave normally. All right, so we will expect the fifth Elliott wave, all right, to do something like this for McDonald's. But if that is the case, do you understand what I'm talking about here? If the fifth Elliott wave is extended up to this point, that will make our third Elliott wave the shortest multi-wave in comparison to the first wave and the fifth wave. So in that case, I will be very, very cautious when we are talking about the extension of the fifth wave of McDonald's stock, because if it's truly extended, the third Elliott wave will become the shortest wave. So with that information, I have a doubt that the fifth Elliott wave will be extended for McDonald's. I have a doubt, all right? I have a doubt because if the fifth Elliott wave is extended for McDonald's, then, you can see here, the first wave is quite long. if you compare this first wave to the third Elliott wave, that first wave is longer than the third Elliott wave. Now, because we have an ABCDE triangle here in the fourth Elliott wave, the first thing that is coming to our mind is that the fifth Elliott wave will be extended. Right now, we have this move up, followed by the second move, and we will be expecting the McDonald's stock to continue to go up and to exhibit 5 minor wave for the fifth wave that we are expecting to be extended. But remember, the problem that I'm facing here is that if the fifth wave is extended, there will be an Elliott wave rule violation, because in that case, the third Elliott wave will become the shortest wave. For those reasons, are you getting it now? All right. For those reasons, I doubt it that the McDonald's stock in the fifth Elliott wave will be extended. That's it. I doubt it. I doubt it. So what can we expect now? Okay, what can we expect? All right, what can we expect? All right, this. So probably. So what at this point in time, as we face that challenge, all right, it doesn't mean that it cannot happen, but I doubt it. I doubt it a lot. All right, unless I doubt it, because you can see that if we call this the first minor wave of the fifth wave, all right, we know that the third minor wave of the fifth wave shouldn't be the shortest motive minor wave of the fifth wave. So we will expect at least, all right, we will expect the third Elliott wave to go up a bit and continue to go up more, and that will make our the real third Elliott wave the shortest motive wave. And in that case, we will have what we call an Elliott wave violation. For those reasons, I will doubt it that, okay, the McDonald's will extend their stock. Okay, they will extend the fifth Elliott wave. So what can we expect? In that case, we will apply Fibonacci, okay, Fibonacci extension to this move here. You see this move here? So I will instead call this one the fifth Elliott wave for McDonald's, and all right, I will expect a flat correction. So which means McDonald's has a high chance to go up to the 152. Here it is, going up to the 138.2%. Fibonacci, can you see the 138? Can you see the 138.2% here? That's the 138.2% Fibonacci extension applied to this one, this move here, that I'm calling at this point in time with a question mark on it. I'm calling this move from here to here as the fifth Elliott wave, and we will expect what we call a flat correction, an expanded flat correction, which means that McDonald's stock will go up to $152 zone, $152 zone, before coming down, forming what we call a flat correction. Now, remember, this is an expectation. The price does not have to fulfill our expectation, but if the price is fulfilling our expectation, therefore we have an edge and we will take advantage of it. But as an Elliott wave trader, one should not assume anything. So we are expecting something, we forecast that there is a high chance the price will behave in a certain way. All we do, we wait. If our forecast is being fulfilled, then we will take advantage of it. All right, that's personally, that's my approach when I'm using the Elliott wave, instead of assuming that it's definitely is going to be extended, is definitely going to stop at 138.2% level. I have an expectation. I just wait and see. All right, if it's happening, all right, the price will break above this high here, and we find a support above that high, and we continue to go to 138.2% Fibonacci extension level. So, talking about how to use the Elliott wave triangle, the ABCDE chart pattern to forecast the fifth Elliott wave extension in normal condition. All right, if the fourth Elliott wave is an ABCDE triangle, Elliott wave practitioner will expect that the fifth Elliott wave will be extended. Looking at McDonald's stock, we see that this is the first minor wave of the fifth wave and the second minor wave. if the fifth Elliott wave is extended, that will make the real third Elliott wave the shortest impulse wave, which will constitute a violation of Elliott wave principle. So therefore, for that reason alone, we will have a doubt that the fifth Elliott wave will be extended. But in normal condition, if the fourth Elliott wave is an ABCDE, a triangle, professional Elliott wave trader will expect that the fifth Elliott wave will be extended. So you have to know the difference between the technical analysis and the fundamental analysis. The fifth Elliott wave will not be extended, all right, if we do not have more buyers. Do you know? So in theory, according to the Elliott wave principle, the Elliott wave theory, if the fourth Elliott wave is an ABCDE a triangle, there is a high probability that the fifth Elliott wave will be extended. But what will make the fifth wave extended? The market should be bullish, all right, and the fundamentals should be strong, and we should have more people, more new buyers coming in and buying the stock during that fifth Elliott wave. If the market sentiment is not bullish and the market itself is not bullish, if we do not have new buyers coming in during that fifth Elliott wave, all right, we will not have that expected fifth wave extension. So one should separate, the Elliott wave theory from the reality of the market, that the fundamental and the market sentiment will influence the fifth wave extension. By looking at the chart of McDonald's stock, I doubt it that the fifth Elliott wave will be extended in this case, though in theory one should expect the fifth Elliott wave extension. We will see what will happen, all right, unless my wave count is completely wrong, all right. You get it now? You get it now? All right, you get it now? So all we can expect is that if the fifth Elliott wave is extended, it will reach the level of $152.00, which means equality between the fifth wave and the third Elliott wave. We will see. We will see, all right, we will see. But I doubt it, because the Elliott wave traders, will be watching the third Elliott wave, which should not be the shortest wave. We will see. We will see. All right, we will see what's going to happen here. All right, we will see. So, because one is not expecting the third Elliott wave to be the shortest multi-wave, my expectation at this point in time is that we will have instead an expanded flat correction. Again, this is an expectation. If it's happening, we'll take advantage of it. If it's not happening, well, we do not fight it. All right? So this is about how to use the Elliott wave triangle ABCDE to forecast, the fifth wave extension like a pro. As always, if you have any question or suggestion, put in the comment section. I always read the question in a comment, all right? And in due course, I'll record another video, to answer specific question, all right? I like the interaction at 2-4 Elliott wave, and I would like to thank traders for watching our video. All right, it's my intention to record, to give traders tips and tricks that they can use to improve their wave count, their Elliott wave analysis, their Elliott wave violation, and also to forecast the market accurately. All right. As always, you learn something new for the first time. Use a demo account, practice until you master it. That's the best way forward. We are the TSTW24 traders, talking about how to use the Elliott wave triangle ABCDE to forecast the fifth wave extension like a pro. So going back to McDonald, the story, the article that I was telling you at www.full.com, the strategy that McDonald is implementing to catch up with Burger King, I think that they have to review that strategy looking at the chart at this point in time. We will see what will happen, all right? By the way, this video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell a McDonald's stock. It's for educational purposes only. Happy trading to you all and speak to you soon.